The big UK lenders, Nationwide and Halifax, and the big property portals, Rightmove and Zoopla, and the government's land registry are all telling us that UK house price growth is around 1% to 2.5% year on year. And then there's ACADATA, who apply some statistical measures to the land registry data, who are saying that the picture is less than rosy. So who do we believe? So I'm just going to run through quickly these headline figures here in this video, and then at the end you can make your mind up. And if you want to comment, and I would love to hear your views and get some feedback on this, so you can say where you think we are and who is closer to the truth, possibly, because there is a bit of a disparity here. So first of all, on boombustinvest.com, house prices, you can get all these links and take a look if you want to as well. The rest of the site is covering financial independence, investments in global markets, that kind of thing. But for UK viewers, we cover off house prices because quite a hot topic here in the UK. So what I normally do with these videos is just start off with the headline figures for the UK economy. So of course, if we're going to see a decline in house prices, then we'd see a decline in the UK economy. So just the headline figures. So GDP, gross domestic product, is up 0.5% quarter on quarter. It's only going up to June 2024, but there's always a lag because this is the honest government data here, and there's always a lag in UK government data, of course. Inflation's down to 2.6%, which is, I guess, good for the economy. Inflation's back down to like normal values, so that would be positive for house prices, I guess, if the economy has recovered, so inflation is low again. And unemployment rate here is 4.3%, which is slightly up on the previous year, and we're going to take a look at that, but it's historically fairly low. So overall, not bad. But just taking a look, what I try and do on this site in terms of the investments and otherwise for house prices, etc., is to try to look at the trends in prices to see where we might be heading in the future. So for example, this is the unemployment rate from the ONS site as well. It's going back quite a long way, so 1971. So as we can see here, in the 80s and 90s, there were problems with unemployment. And as you see, coming up to 2008, great financial crisis, big spike up in unemployment, COVID here. And currently then, it's hard to see because this is covering such a long time, this chart, but we are trending up overall, although it's still fairly low by historic standards. But there is a rise recently. And so what we want to watch out for is if that continues, of course. If we start seeing something like this, which we saw in COVID, so that was the peak of the COVID unemployment here, then, if this quarterly rise continues here, that would be cause for concern. But currently, it's still sort of relatively low historically, so not too bad there for unemployment. For inflation, as I said, that's come back down. So if we can see, once this refreshes, we'll see a trend. So, obviously the trend here is down. The risk being that you can quite often overshoot on these kind of declines. That's come down from obviously a very high base from COVID. So we're down to like normal levels. That's good. That's positive for the housing market. But if it continues down and overshoots, then we could see some problems with deflation as opposed to inflation. But benefit of the doubt currently, looking good. And then the GDP growth, we had the one anomaly here in Q4 2023. So we need 2 quarters of GDP decline for a recession. So we weren't far away at start 2024. In general, though, the growth has been pretty anemic in the UK for quite some time now. So if I switch to say the 10-year, yeah. So I mean, if you see here, a bit hard to see, but 10 years is like 2.4, 3%, 2%. And then after COVID, we sort of switched down to 0.9, 0.5, minus 0.3. So pretty low growth, but we're still in positive territory over the past few quarters. So no recession or anything like that. And then mortgage approvals then, a little bit anecdotal this one, but just to show sort of the health of the market, there are transactions in the mortgage market that have been rising. So, from that perspective, it's a healthy market, although, the number of mortgage approvals doesn't necessarily tell you anything about house prices. It could be improving at lower prices. So, however, anecdotally, that shows that there is at least some strength in the market. There is market participation here at fairly decent levels. So in general, then we're looking okay so far. And then the Halifax and Nationwide lenders, then Halifax is saying, that the monthly change we're not interested, or quarterly. It's the year-over-year annual change that is, the big one really. So according to the Halifax, that's up 3.9%. And then there's a lot of differences between how the Halifax, they've got their own data sets, and the Halifax Nationwide, and apply different statistical methods, etc. So different, probably kinds of different cherry picking. Obviously, these are vested interests. So take it with a pinch of salt maybe. But anyway, about 4% according to Halifax, which is the highest of all of the data sets. And for Nationwide, it's 2.4%. So it's quite a big difference. And again, these kind of national measures, they kind of don't mean anything on a regional basis. So some regions will be higher, some regions will be lower, and that doesn't matter whether the trend on the national basis is up or down. So always look at your own market, look at sold prices you can get them on the Zoopla and I think Rightmove and like some of these other websites. I'll cover them sold prices in other videos on this channel as well. But anyway, so Nationwide then 3.2% September 24, but like declining, which could be seasonal, sort of a year on year, 2.4% compared to October 2023. With Zoopla and with Rightmove. So, of course, these are asking prices. So it does show the sentiment of sellers. So if there's a slowdown, you would see bigger drops than the seasonal drops in asking prices. So it still can be important, but the sold prices are still, the gold standard. Really, that's what prices are actually selling for. However, for what it's worth, the Rightmove index shows a drop of about 6k this month. So average asking price 367,000. But August has seen monthly declines in prices for the last 18 years. So, and apparently this month's fall is in line with that long-term average. So that's not necessarily a bad thing. The first Bank of England rate cut for 4 years has led to an immediate upturn in buyer activity. Again, you see Rightmove and the big lenders, they're always going to try and talk the market up, I think. Number of potential buyers contacting estate agents about homes for sale has jumped 11%, from 11% up to 19% year on year. So, and as we'll see, I think there's more first-time buyers coming into the market for certain reasons because of the rental market. So yeah, there's activity in the market there. According to Zoopla, then it's only 1% year on year. And there's a lot more sort of first-time buyers coming into the market. So if you look at these headlines here on Zoopla, sales activity running at highest level since 2020. Pipeline of sales is apparently pretty good. So the market does seem to be sort of fairly buoyant. However, the high supply of homes, there are more and more homes coming onto the market, and that's due to various factors like some landlords might be selling up, and as I say, first-time buyers, because the rental market has gone up quite a lot. However, the affordability pressures are still keeping a lid on prices, basically. So 1% is pretty much flat. I mean, that's less than the lower sort of rate of inflation, isn't it? So effectively going down in price. And then first-time buyers seem to be coming back into the market here. Again, renting has gone up, probably overshot after COVID, and that's why we're seeing this shift. And also, there'll be first-time buyers will probably be paying more stamp duty next year because of the changes by the new government. So that could also be downward pressure on house prices. That's what it's saying here: the reversal of stamp duty, and also additional property, land tax charges, etc., coming into play. So that is also a risk for house prices going forward. So Rightmove's weekly mortgage. So in terms of mortgage rates, the average 5-year fix is 4.8% now. So the OBR then, Office of Budget Responsibility, so they produce this forecast, although it's based now on some ONS house price index data that is no longer being produced by the ONS. However, for what it's worth, they did put a lot of, I think, statistical research and analysis into this. So even though this was their prediction, I mean, this was from based on this sort of forecasting they did. I don't know if it's quarterly, annual, whatever it is, but from March 2024, but they forecast something that's actually seems to be quite accurate with the final ACADATA data series we're going to look at. But this was down at about 3%, 3.5% for the year, which seems to be in line actually with what might be the more accurate measure of, or the more unbiased measure of property inflation data. And they magically had this going back up again after 2024. So again, will remain to be seen if that turnaround happens. According to the land registry data itself, then so this is obviously all sort of transactions, not just mortgage. So this is, I think, a better measure than the lenders and the property portals here. So average house price about 293,000, 2.8% year on year. So again, it's like between 1 to 2% for all of these guys here. This, and then the actual prices here you can see on a graph, and you can set this. You can get the links on boombustinvest.com. But if you go to the longer term, go to this link and then switch it to the longer term by clicking on the timeline here. So I mean, this is like just sort of nominal or actual prices here. You see they do sometimes go down. So this is the Great Financial Crisis. So an average price here for about 189, going down to like 154, and that was in sort of October 2007, and it took to about June 2015 to get back to break even there. And then after that, it sort of ground higher, pulled away from that 200k mark on the sort of average price. And this is covering all flats, terraced, semis, detached, all property types. And so it did, so it peaked here August, November 2022, come down since then, and then it's only recently sort of come back up. But again, this is all to, across the whole of the whole country, all regions. It's not really relevant to you if you're buying a property. You need to just get the property prices for those areas that you're looking in. And so, but this does at least show the trend of prices. So that's the only reason it's useful, really. And then the other one here is that again, what we talk about in these data sets is the year on year. So over a year, is it going up or is it going down? Is it trending up or trending down? And so we see it turn negative here in the Great Financial Crisis, 2007, for quite a while. It dipped down again. So this was like around the sort of sovereign debt crisis, a little mini crisis there compared to the Great Financial Crisis. Similarly, nearly negative there around sort of getting around COVID. There's probably going to be a recession there anyway. So this inflation, this rise was probably caused by all of the stimulus and the money printing, etc. And now, because of the inflation, prices have come down and they did turn negative, which is, it doesn't happen often. And since the recovery, as we've mentioned before, in the economy with inflation getting under control, therefore jobs not being lost, etc. So the price, year-on-year price, has recovered here. But these things, as you see, don't move in a straight line. So if we see unemployment continue to rise, as mentioned before, it's more likely, not definite, but more likely that we'd see that this decline, this year-on-year, start to go down, because it's probably more sensitive than this graph here you see here to the actual changes in the economy. So you'd see this potentially go down, or if we see the economy continue to stabilize with unemployment not going up too quickly or anything like that, inflation not spiking back, which is another risk. It's a potential outcome. If we don't see those two things, we see the economy stable, then we'd probably see the house price year over year sort of grind higher over 2025. So this is the ACADATA website. On the homepage, you can see the link for the whole of the UK. It's quite nice. It's got a graphical representation for each main region in the UK and the the monthly and annual price changes. So the reason I think this is probably the best, most realistic, and possibly most accurate source for house price growth inflation data in the UK is because it's sort of academically based, but also these guys I think they're involved in supplying house price growth to some lenders, possibly something like that. But in terms of the actual way it's done, it is based on the land registry data. Pioneered the use of land registry data for the mainstream house price index. And it was launched by the Financial Times, actually. It's been going for quite a while, back in 2003. So they're not like they're newbies or anything like that. And so the land registry final sold prices, they are kind of better than the other data sets we're looking at, because it's not just mortgage properties, it's also including cash-based transactions, not just mortgage-based data, as we said before. But the problem with land registry data is that only sort of circa 38% of sales are reported in a timely fashion. So what these guys have done is that they've got some really clever people from Cambridge University and City University to produce a model that effectively accounts for that lag in an accurate way. So this is what we see here, and you can drill down in. And I'll do some other videos to go into probably London, because if we see a house price decline, usually it would sort of start in London and then spread out from there. So what this data set is telling us currently is that in the south of the country and in London, we've got price declines, annual price declines, as you can see here at the bottom of that sort of little pop-up that comes up, around about 5%. In the Midlands, it's around about, there's East Midlands minus 4.1, West Midlands minus 2, and then as we go up the country, things improve. Only -9% for North East, -0.7% for Yorkshire and Humber, -0.8% for North West, and -2.2% for Wales. And then Scotland's doing okay at +2%. But in stark comparison to the other data sets that we're looking at here, this data set is showing declines across the entire country. That's year-over-year annual declines, so trend to the downside, and pretty significant as well in the southern parts of the country. So 5% year-on-year decline. When you add inflation on top of that, you're talking 8%, 9%, depending on what inflation figures you take. So that's the final data set that you should probably be looking at. And as I say, I'll do other videos you can sort of drill in here, and it goes in further into the regions here, boroughs, etc., within all of these different regions within the country. So it's pretty good resource. So please like and subscribe, guys. Help the channel out if you like the video, and let us know what you think in the comments. Be interesting to get feedback on what you think, where you think house prices are going. I'll see you guys in the next video. Thanks very much.